Hello, everybody. Welcome back to another episode of Citizens Gambit. This is take like 5, but it's okay. My name is Suhaib Qasim, and I'm here with Ojus Konokar, our co-host, and also the host of last week's podcast, last episode, which is 2 weeks ago. And it's about vote shaming and the voting process. And so if you've not checked that out, please check it out. I was unable to be a part of that because I was having crazy internet problems. And we have Xfinity to blame for that. And so Ojus very gracefully decided to take it solo, which I was very thankful for. And so if you have not checked it out, please check it out. Also check out our blog and our other episodes. Our blog is citizensgambit.org. You can check it out. I'll put a link in the description, and it's also in the description of every other video. And you can also check out the other videos. So we did one on psychedelics recently. We did one on politics and comedy. We did one on George Floyd and defunding the police. So we did one on the media. And we have many more interesting topics to come. And you can also check out, if you have a Facebook, the Citizens Gambit podcast Facebook page, as well as other social media. We have an Instagram as well. So if you like political memes and to also be updated on what's going on with the show, then please check it out. And so without further ado, we're going to be talking about the economy, economics, the evolution of economic theory, at least what we know so far, and also the concept of an externality. And so we're going to be going into these concepts in depth, at least in as much depth as we can in this episode. And so we just want to let you know that it will be very expository in nature, just because there's a lot of things that are a little bit difficult to explain, and just things that are not as well known in the general public. And so there's a lot of sort of background knowledge to understand. But without further ado, we will start our discussion on the economy. We're not economic experts. And so, it goes without saying, we have not studied this at length, right? We don't have, experience in the field of economics. We don't have degrees, but nonetheless, we do think that it's very important for people to understand the topic of economics and how it's evolved, especially because it's a very important political topic. And it's also something that's very important when deciding who to vote for, which is something that some of you might think of doing if you live in the States. But it's also just something that that almost connects every other country, and a lot of the economic actions that are taken by the US have global ramifications. And the first one of those things is something that we should definitely touch on, and that we will touch on first, is the financial crisis of 2008. And this is something that I think kind of made the economy at large, and the stock market, Wall Street, all of these institutions, something that became more scrutinized, and just something that people should pay more attention to. This was a very pervasive event, and this is something that almost signals the age of a new, almost like a political era, or rather economic era, in terms of economic policy and economic philosophy. And so, Ojus, do you want to talk a little bit, and we can go back and forth about the history and also kind of the impact of the financial crisis, because there are so many layers to what has happened, and there's so many steps, and so many things that, many people our age don't really understand about the financial crisis. And so do you want to talk a little bit about that?
Yeah. So we were a little young when the financial crisis happened. I was, I think, 8 or 9, I think same with Suhaib. And so for us, it's something that kind of marked our lives, but in a way that we didn't really understand. And so I think this is a great episode for us to go into some really recent history and look at, kind of why we are in the political moment that we're currently in, and how we can trace that back to its economic roots. And so capitalism, for now has been a decent system that has worked out for us. But every few years it fails miserably. And so the same way it failed in the 1930s, it failed again in 2008. And so I wanted to go into a little bit of depth about what happened in the financial crisis, and just kind of get into like the background and underlying pieces about it. I don't want to cover what the government did or how the government got involved or whether it was even right for the government to get involved in the first place, because that part is kind of debatable. But there are a few basic facts that we can all agree on. So we know that kind of in the 2000s, investors were throwing their money into the housing market because it was easier to get interest on houses than it was to get on government bonds, and they paid back lower interest. And so what a lot of banks started doing was engaging in kind of predatory lending practices that gave money to people who were unlikely to pay it back. And what they would do with banks was that banks would create these things called mortgage-backed securities and CDOs, where they would just compile a bunch of mortgages that people were taking out on their houses and then sell that out to lenders. And this was like millions and millions of dollars. And so people kept thinking, oh my God, the bank is giving out more money, and you can buy the dream house that you always wanted. And the price of these homes just kept going up and up and up. And people would keep getting riskier and riskier mortgages that they generally couldn't pay back. And banks kept thinking, it's okay if a homeowner, defaults, which is where like they can't pay back the bill, because it would just mean that the bank would land with a house with higher worth. And that presumption turned out to be completely false. And we'll go into kind of whether price determines value, whether value determines price, and how to redefine value and things like that in our current economy. And what happened was the value of the houses that these people were buying was far less than the prices that they were willing to pay for them. So when this housing bubble, as it was called then, burst, everyone suddenly just lost a ton and ton of money that is still haunting us back to this day. And so I think this is kind of where I want to open it up for a discussion and kind of get into a bit of the basics of a labor market. What do you think, Suhaib?
Yeah, I mean, I think just to step back a little bit, I'm sure our viewers know what a mortgage is, but it's essentially an agreement by which a bank kind of lends property to somebody as almost like an item of something that they can take back, if debt is not paid, essentially. And so the financial crisis really has its origins in the subprime mortgage crisis, and that's what Ojus was just explaining, but subprime mortgages specifically are ones that are issued to people who are borrowers with credit records that are a little bit questionable or impaired, or just low credit ratings. And so I mean, there are many discussions now being had about whether or not the actions taken by the government, but also just the institutions that have led us to such a kind of fragile system that seemed to break down are sort of feasible or should have been changed. But at the end of the day, I mean, like it was such a catastrophic change. It was such a catastrophic disaster that even impacted global economies, and everything that the government did was kind of done, and this was done during the transition between Bush and Obama. And it was mainly Bush, actually, and I think Obama kind of got the tail end of it, which was very hard for the beginning of his campaign. But they were acting, within. They were acting as a result, I guess, to coax this crisis, a world crisis, and they ended up, giving money to the banks instead of giving money to the hands of the people. And this is where the main split happens within the American population, at least now. Now that everything's over, and we can sort of comment on it. I personally, I am a fan of giving of putting the hands into the people, and I do think that we could have actually putting trust into the people could have actually led to a much smoother transition than we got. Again, I understand that it was a crisis, that we kind of had to just do what we needed to do in the moment, and it was solved. I mean, obviously, but yeah, we're still really, actually, we are in a sense still experiencing a lot of the side effects. But I don't really, I feel like I haven't come to a sort of conclusion in my head as to what I think is the definitive decision that they should have made. But I don't know. I mean, what are your thoughts on what it actually, what having been into that situation in the first place has to say about the way that our economy works?
Yeah, I think that's a really good point, which is that the fact that we allowed banks to kind of get to this place where they, kind of valued profits over everything else is inherently wrong, right? Because what happens when we value profits over the lives of our fellow citizens and our fellow neighbors and things like that, we do anything to kind of get the money. And I think that's where, economics really takes a more social turn and actually becomes a social science, in that you're not just thinking about in this abstract value of money. You're thinking of how can I actually grow and empower a full society around it. And the fact that we are in this day and age where money is still this be all end all, it's kind of problematic. And I think it's kind of symptomatic of the type of capitalism that we have in America right now.
Yeah, I was actually, that reminded me when you were talking about how it has evolved into this sort of, it's become, it is very much a social science, but economic theories, they are like scientific theories, can be constantly proven, disproven, revised, but the difference is that, when economic theories go wrong, it's catastrophic, which obviously it could be for science as well. But a lot of times with the way that our economy works, politicians consult with economists who have varying perspectives on what it is, on how to, I guess at the end, make profit, right? Make as much profit as possible. And these are the devices that they came up with. And it may have worked up to a certain point, and we're still continuing to use them even after the fact. But there will always be a debate about how to do things the right, or sort of, I guess, how to maximize efficiency and how to maximize output and how to maximize price, and while just keeping things afloat, and I frankly, I don't personally think that economists are sort of given as much weight as they are right now in terms of what the consequences of their their studies and what they are paid to do, because it has such ramifications, especially with 2008. I mean, the amount of jobs that were lost, the amount of people whose houses were lost. And I'm very lucky in that our family was, actually we were moving in that during that period, but we were lucky in that we did not fall into that situation. But yeah, I mean, I don't know. I mean, it's very difficult to, and it's one of the reasons why I think, I've always shied away from economic theory, is because there is almost no real, there obviously is no right answer, but someone will benefit from a theory that somebody, makes. And it's and that person that benefits is usually at the expense of
doesn't benefit.
Yeah, right. I mean, of someone else that doesn't benefit, and that is in a sense human nature. But the fact that it's sort of the net was cast so wide with the financial crisis specifically, and and their Federal Reserve Board had to sort of do so much afterwards was just a sign that I think we need to sort of rethink fundamentally, right? And um, it's not just about um, about Wall Street and things like that, but it's also like you said, it's like how do we change the value system within the economy, and like I said, how to make it so that the people that are obviously inevitably going to be impacted more than anybody else have some type of cushion or some type of understanding, as to what's going on. But like I said, there are many economic theories, and there's sort of an evolution of economic thought, and we'll definitely go into that, as to it's like how certain economists, many of whom are very well renowned and are looked up to by politicians themselves, right? And people who advise politicians on what's going on rather what policy would be best. How that evolution has occurred. But one of the first, I guess, one of the sort of prominent economic voices is Adam Smith, and he talks a lot about how capitalism exploited, the division of labor in the labor market. But Ojus, I know you're a fan of Adam Smith, but do you want to talk about what he has sort of had laid out?
Yeah, let's get into some political theories. I think you bring up a really good point. Just to go back to one thing before we dive in, which was this kind of idea that, like, people, because economic theory is not just a scientific theory that is relatively removed from the rest of society the way pure sciences are. It deals very much with human life and human experience in a way that in the way that other pure scientific disciplines don't. And I think that was a really important distinction that you brought out, because we'll try and cover a bit of John Rawls in this episode, who basically said that, in society, it's important that, that every person gets a basic cushion, because, there's so many things that are up to chance. But really, this idea of our labor market and how we've built up our system really starts with Adam Smith, who talks about, dividing labor. And so he talks about the fact that, if you live in the Highlands of Scotland, he was a Scottish philosopher, and so he talks a lot about their motherland. And so,
Yeah,
sorry,
exactly.
forgive me, that was so bad.
No, it's okay. I think we just lost our Scottish audience, but it's okay.
But he talks about, if you live in the Scottish Highlands, you need to be someone who knows everything, right? If you're going to make, clothes, you need to be someone who can raise the wool or raise the sheep, shear the wool,
Right.
dye it, and then sew it into actual clothing and things like that. But that's a very inefficient process. And what they found was that when you have, like, the Industrial Revolution, you have this growth of factories and things like that, breaking stuff down and just doing that one repetitive job and hiring a bunch of people to do it at each stage makes it extremely efficient. And this is kind of what he says differentiates the wealthy nations from the not so wealthy nations, which is the ability to kind of divide up the labor. And so what he says is that because of this, you have to base the value of whatever the good is on the labor that's done. And we've typically done that by using, gold and other precious metals and things like that.
Right.
And he says specifically in book 1, chapter 6, which is that the price of any object is dependent on 3 parts: the rent of the object, the labor of the object, and the profits. So rent is basically the payment that you give to a person who owns your land. Wage is what you pay the laborer, and profit is everything else that you can keep for yourself or for those who have taken risk, basically, to lend you the money. And so what he says then is that when you have the whole produce of labor. It always belongs to the laborer, and he must share it with the owner of the stock that employs him, right?
Right.
So because of this, what am I talking? Give me a second.
Yeah, you're good.
God, I haven't read these notes in so long.
Yeah, no. Was that sound coming from your screen? Oh, is that a bird?
No, it is a car alarm.
Oh, well.
Yes. A carjacking might be in progress, but
Is
we're
that
sitting
actually?
here reading Adam Smith
Wow.
as society breaks down.
Yeah, right. Wow, that's a beautiful
Okay.
image.
All right, let's go back.
Yeah, yeah.
So chapter 6 of book 1, Adam Smith talks about the fact that the price of any object is dependent on 3 parts: the rent of the object, the labor of the object, and the profits, right? So rent is the payment that you give to a person who owns your land. Wages are what you then pay the laborer, and profit is everything that you keep for yourself and also for the people who have lent you money to start up the business in the first place. And so what you want to do is what any capitalist wants to do, which is you want to decrease the rent, you want to decrease the labor, and you want to raise the profits, right? And so you need something that is going to break whatever the labor is down into very tiny chunks that can be easily done, so you don't have to pay much to the labor. And then you want something that is going to, you want to have a lot of capital to get the business started, and that will, raise the profits and decrease the amount that you have to pay to the people who lent you the money in the first place.
Right.
And you want to decrease the rent. And rent is basically when you sit on some form of natural resources or things like that, you get value just by having those resources, right? So if you look at the way, people like, who was the dude who did railroads? Pullman? Yeah.
Yeah.
And
That,
like the whole thing where he owned the natural resources and owned the labor and owned the management and the services sector, right? He was what was decreasing the rent and decreasing the labor while simultaneously jacking up the profits. And so obviously in our day and age, that is why a capitalist would head towards things like globalization, but it goes against basic moral principles. And the reason why is that things like rent don't take, we don't value things like rent in this economy, right? We don't pay anything for the amount of pollution. Suhaib and I had a whole discussion on education. We don't pay any money on education because we don't see a direct profit from it. It cannot be immediately serviced and provided to the general economy. And so because of that, there are a lot of flaws in Adam Smith that we fail still to have acknowledged.
Yeah. And so he does represent this sort of base level understanding of of how capitalism is supposed to work. And the interesting thing is right now the US is kind of like, it is sort of capitalism sort of run amok in a sense, where a lot of those basic principles are being adhered to in our current system. But like you said, there's a moral, there's the moral economic case, and then there's the economic case. And and in most cases that those don't align, and at the end of the day, it's like that's something that is up to the politicians to understand, I guess, and to sort of I was gonna say play with, but that's not really it's not, I wouldn't say play with, but to actually contemplate is that institutions like the stock market, right, which obviously crashed, and like Dow Jones went down 800 points during the financial crisis, to 2008. But instruments like the stock market, which are only used by the single digit percent, the top single digit percent of the country. I'm not sure exactly what the percentage is, but that these instruments can be used to maximize profit in many cases. I mean, obviously, that's at least the point, right? That's what they're designed for at least a sliver of the population. But when it goes wrong, it could lead to the harm of thousands, millions of people. And so, the basic Adam Smith model is is used by most capitalists now, sort of almost as a justification for a lot of what we see. But it should be thought of. It should be taken into account that that was, hundreds of years ago. That was centuries ago, and a lot of the instruments that we've created nowadays, they simply are not. We're unable to match them. It's not this. It's not the same. It's not. You can't always, relate what was the case back then to what is happening, now, because we have so many. The world is so connected, and money is flowing, all the time. It flows so freely, from country to country and person to person, and we won't be talking about Bitcoin and all of these other things that allow people to transact money very easily, but the economy is becoming so much more complex, that it's new additions need to be made to a lot of these basic economic principles. But another sort of philosophy, I guess, of economics was by Keynes, which for some reason I kept saying Keynes, but I guess it's Keynes. But by John Maynard Keynes, who kind of created a lot of what is perceived now as sort of like social democracy, or I guess like social economic principles, and the basic principle that in certain times, and especially in times of crisis, right, where there are circumstances, the stock market crash of 1929, the Great Depression, as well as this 2008 incident, where the government should intervene, right? Because that is simply where these instruments that we've created under Adam Smith's principles are not working at its potential, right? And the government, how it should help is up for debate. But like we said, there are people who argue that it should go directly into the hands of people, and that could be in the form of a UBI, which we will hopefully discuss later, or in some type of cushion that could be used for the majority of people, unemployment benefits or whatever. But Keynes was essentially said that the government has to intervene, because there is simply when the capitalist system has sort of maxed out its potential, there's nowhere left to go, right? And Keynes understands this because he was actually there in 1929, and he understood that there was this, people were losing essentially hope in the free market, right? And he understood that wages actually, they did take time to catch up to market changes, right? And that makes sense. And so, in that sense, people are helpless in certain circumstances of crisis, and so if we need to minimize the amount of unemployment, and still increase output, which are obviously important things to do, then the only way you can do that is by government involvement, right? And so many people think that this is sort of the beginning of a lot of these socialist programs, and a lot of what we have been I guess what America has been championing and for many years, which are the championing, I guess they've been introducing, and have been funding for so long, but these sort of socialist programs, but it's not, but that is definitely not come at the expense of a lot of the same instruments that we continue to use for decades and decades.
Yeah, I think that it's important in that Suhaib said the distinction between that, like, wages, they take time to catch up to things like market changes. And it's mainly because if we take an example of like three people, A, B, and C, and A sells to B, B sells to C, and C sells to A, in the event that A somehow declares bankruptcy or something and cannot sell, then you have the whole breakdown of that mini economy where B can no longer sell to C, A is not going to buy from C, so C can't sell to A, yeah. So C is not going to buy from B, and it just completely deteriorates. And so what the government does then is step in, put some money in the place where, give some money to A so that A can still go and buy from C and then sell to B, and then B will sell to C. So it's a very simple system that basically states the economy is not a closed system. Every once in a while, you have to pump a little bit of energy into the economy. And I think it should be noted that Keynes, so there was another big capitalist at the time, which was Milton Friedman, who basically advocated for laissez-faire capitalism, which is that in the event that, say, A defaults, don't worry about it. It will resolve itself. And maybe there'll be a different vendor who comes in the place of A, who can then fulfill that economic niche, I guess. The problem is, which is exactly why I wanted to emphasize Suhaib's point that wage took time to catch up to market changes, is that it takes a long time to get to that point. And there's this beautiful quote by Keynes where he acknowledges that, like, yeah, laissez-faire capitalism will probably work in the long run, but in the long run, we are also dead, which is basically a nihilistic way of saying, yeah, sure, we can spend time, finding someone else to fill the economic niche, but chances are the country or that system or that economy will be wrecked by the time that happens. So you might as well just kind of pump some money in now, get people afloat, and then we can look into, where that takes us from here. So basically, if you put in money now, you can extract money through taxes and things like that later, which is, I think, to tie it into, well, we're definitely dating this program by saying this, to tie it into the COVID crisis right now, right? People are saying that, we can pump money, a little bit of money into the economy now, which is, actually getting hands through unemployment checks and the stimulus checks and things like that. That is the only thing right now that is floating the economy. But basically what they want to do afterwards is extract it again through taxes. And then we'll talk about why that's not necessarily the best method to go by, and then some people that even built off of Keynes to create things like modern monetary theory and things like that. But I think that Keynes is probably the biggest, one of the bigger houses. Keynesian economics is one of the bigger houses in economic theory, and it's a direct rejection of Adam Smith. And I think that a good branch off of Keynesian theory is also John Rawls. What do you think, Suhaib? Should we get into John Rawls?
I think so. Actually, wait, but first, before we get into Rawls, just very quickly, I mean, the idea that we pump, money into the hands of people, I mean, there's no better way to boost the economy than to do that, right? I mean, because people, when they get that money, they're obviously going to spend it, and because they have to in most cases. And with the COVID crisis, we're seeing the I guess the effects of lacking in this regard, where we're seeing a huge implementation issue with people who are not getting their unemployment checks and whatnot. But this is actually negatively impacting the economy, which is not something that, I think is addressed that much. But Keynes was obviously for getting people money because it is something that can benefit the governmental economy in the long run. But anyways, let's go ahead with John Rawls.
Okay, so getting into John Rawls. John Rawls basically came from the idea of this is where kind of economics as a social science theory kind of feeds into political science, right? As an idea of, can human beings actually live and flourish for extended periods of time in what is a liberal democratic society? And that would characterize basically most industrialized Western nations today as kind of liberal democratic societies. And he asks this because he sees that a lot of societies after a certain point simply descend into chaos. And I mean, we're seeing that now with the COVID crisis and with the police brutalities issues and things like that, where we ask ourselves, is chaos the only place where true progress can come from? And maybe there's something about our nature that just subverts any form of rational conversation and has to implement force. And maybe it's just in our nature to do that, and we're just kidding ourselves with liberal democracies. And Rawls says, no, that's not necessarily the case. And it's important to think about how we get there. And he gets there by understanding the concept of justice, right? How do we measure justice? How can we create a society that is built around justice? And he says that we should have what is mostly called distributive justice, where we essentially base our societies on things that benefit. We make our society because it benefits us, right? And so it creates surplus value. And we have to figure out a way to distribute that surplus value, right? And so there are different types of inequalities that arise. And should these inequalities be factors in how we distribute this extra value? Is it fair to, should it be on like a first come first serve basis, or should it be on like a who can arm wrestle someone the most basis, things like that. And Rawls says that because we live in a society where there is inherent inequality, and by inequality, I know that term gets tossed around and politically weaponized a lot, right? We say inequality in terms of like economic inequality or racial inequality, but Rawls, when he talks about inequality, he really just means like the difference between me and Suhaib kind of thing.
Yeah,
like,
right.
We're majors in different, we're majoring in different studies at a university. Like, does that counts as, I guess, as an inequality, right? Or we're different colors of brown, that is an inequality in a sense. And Rawls basically says that sort of inequality, an inequality where different colors of brown, is just as long as it is relative to the work or measure of work. So so inequality on the basis of gender in terms of pay is not fair, but inequality of gender is natural, if that makes sense.
Yeah.
So this is where we get into kind of socioeconomic theory, and this is kind of where it becomes into more of an economic issue and something that gets into an economic issue, right? So someone who works 40 hours a week, right, should technically get a dignified living even at minimum wage, as opposed to someone who abuses drugs most of the time. And that this person who works 40 hours a week, right, they are doing work, and therefore that work should be rewarded, right? And what we're seeing right now is that work is not rewarded, and that people who work 40 hours at a minimum wage don't necessarily get a dignified living. Whereas if we see someone like Jamie Dimon or the Kardashians, basically, who are born into wealth, that is an inequality, and that's someone who was born poor versus someone who was born into wealth. But the difference is that Jamie Dimon or the Kardashians don't do that much more work than someone who works at minimum wage does. And so that inequality is inherently unequal, and therefore not a system of distributive justice, if that makes sense. It's a bit of a kind of, it's a nuanced definition that can get thrown around and tossed around easily.
It's a very sort of popular, especially nowadays, it's a very popular idea. It's a very popular concept. And I 100% agree with it in theory, and I think we've talked about this before, but it's almost a natural part of organizational structures and companies and whatnot, where, and I know it was like this for decades, and I'm not sure if it is as much like as it is now, but where the higher you rank, the less you work, or I guess maybe the type of work changes. And that's where I sort of have a little bit of hesitation with a lot of what we sort of concede with these definitions of someone working minimum wage at one position as opposed to someone who's probably doing less manual work at a higher position. And we see this even with even in small, is the smallest scale you could possibly think of, but even if we think about school organizations, where I used to do this one position at on the board of an organization, and then now this year I'm like one of the presidents, and I do a lot less work in terms of the actual time that I'm spending on that thing, right? And because a lot of the time, because I'm mostly surveilling what the other positions are doing, and and sort of working out sort of the bigger picture things. And so the type of work is very different. I think you could say, albeit, it's a very small scale, you could kind of look at it in that sense where it is true that Mark Zuckerberg is not working as much as the coders and the engineers, right, who are entering, but it is, and I'm not justifying the income disparity, obviously. But it is interesting that, like the actual work that Zuckerberg is doing in terms of, I don't know, traveling the world and having meetings with China and like things that are more administrative, I guess. It is a different type of work that isn't comparable to that of somebody who, is working the minimum wage side of the company. And so obviously I 100% agree with the concept that when you look at these two situations, or these two types of the two people, right? One of whom is this rich person like the Kardashians, and then the other who is a Jamie Dimon. And again, I think it's very difficult because a Kardashian is probably doing a lot less work than who's Jack Dorsey, or somebody like that, just because there may be, there's a lot more that goes into Twitter, I think, than goes into the Kardashian thing, the Kardashian legacy, whatever is making them the money. And I agree with the idea, because again, because Rawls does say that inequality is, it does exist, right? Just like between me and you, there is an inequality. And so that's something that we can all agree with. But it's something that I'm thinking, that I have a challenge, that I guess I have a problem with myself, is like, how do we take that into account and still make a morally just, and a sort of even like logically just economy that works, so that the work that someone does, and the dedication that someone is bringing to a job is giving them that financial benefit that is still comparable to that of somebody who, might have been there longer, or might have a higher position, but is still, but they're all working for the same company. They're all working for the same thing. And so how do we, given the inequality that we have, how do we maximize the equality within it in a weird way? Which is, I guess, what Rawls is aiming to do. But I don't know what you think about that, because I saw you making some faces.
You're 100% correct, which is Rawls is trying to answer the question of how do we create a society that accounts for the inherent inequalities in work. And when you were talking about Keynes, you said that it's important to have a basic socialist cushion, I guess, for everyone, and that is exactly what he says. And his basic idea is that because we are all born with these inherent inequalities, right? I could have been born to Jamie Dimon's family, but instead I was born to my lovely, lovely, lovely parents. But because there are these inherent inequalities, right, we need the important thing about these inequalities is that they are on the basis of luck, right? There was a 1 in 100 shot that I could have been born to my parents. There was a 1 in 100 shot I could be born to Jamie Dimon's parents, if there were 100 parents in the entire world, which of course doesn't exist, but you understand what I'm saying. It is pure arbitrary chance that we end up with the inherent inequalities that we end up with, which means we need to, if I was born like this today, I might be born, in like the slums of Mumbai tomorrow, which means that I need to have a system in place that accounts for wherever you were born, you will still have a chance to succeed. And that is what is that rule basically is called the maximum rule. So it calls for the best situation for the least advantaged in relation to all other positions in society. So and this kind of goes into my personal philosophy as well, where I'm not against Jeff Bezos if Jeff Bezos remains a billionaire after all his workers have a strong social safety net, aren't living in poverty, aren't afraid of losing their jobs, and have healthcare. If then after that Jeff Bezos remains a billionaire, I'm okay with that. I don't have anything personal against Jeff Bezos and me not wanting him to succeed. But if it's at the cost of the lives and livelihood and success of other people who work for him, that's when it becomes an issue. And so what he called for was a revised capitalist structure, something closer to kind of democratic socialism that people like Bernie Sanders and Andrew Yang kind of preach now, because he saw that laissez-faire socialism does not take into account the inherent birth inequalities in a society. And what we need to do at the basic level is understand that we are all dependent on the help of each other, right? So Suhaib and I can put effort and money and energy, not money, well, sometimes money, well, effort and energy into this podcast because our parents are helping us and they give us a roof over our heads and education that allowed us to ask these kinds of questions and food on the table. And that sort of success, or even success of like the so-called self-made billionaires, are made on the backs of the rest of society also providing for them. And so because of that, we need to also provide for everyone else in society.
Yeah, yeah, and we'll move on. But before, yeah, I mean, I agree, and I think that that one of the problems is just that it's very hard. I mean, I think one of the main problems with the in terms of the economic side of it, and figuring out, I guess, just how to account for these disparities, or how to account for the fact that poverty still exists, right? Which, you know, I don't know if, you know, yeah, like you said, like income inequality as a term is very much weaponized, and it's sort of thrown around a lot, and a lot of people don't, or a lot of people use it, but are really meaning something else. And I think what people really think about is that, you know, is that we have a problem with poverty in this country. Like, we have a problem with homelessness, and we have a problem with people who are working multiple jobs and who are still unable to allow the system to work in their favor. But, you know, like you said, it's like the existence of a certain person who makes a lot of money is not the issue, right? And there are many people who believe that. There are people who believe it is immoral to be a billionaire, to be a millionaire. But I think it goes without saying, like, when a lot of times when we look at, there are many people who make that type of money who we would say, given how they were born, or sort of like how, and these are obviously extreme cases, you know, somebody like a J.K. Rowling, who was homeless, you know, and then has sort of made her, or I guess made something that had a huge cultural impact, and now she's a billionaire. I mean, one of the richest people. Most people don't look at her and then say that she didn't deserve it, just because she made something that was able to touch that many people. And it's not like she knew it was going to. There was a lot that was sort of out of her control, or obviously luck based. And so that is the big problem, is that it's very hard to sort of understand where a lot of the wealth, like what wealth is okay, and then what wealth is taken at the expense of other people. And also wealth in many cases, especially with people who are, you know, CEOs. I mean, the top, you know, the billionaires and the CEOs, a lot of their wealth is actually is in like liquid assets, you know, and other things. It's not just in, you know, hard cash. Like, they're not, you know, Scrooge McDuck just sitting on a bunch of money. It's just like very very sort of variable, and it changes a lot. And so it's very hard to pinpoint exactly like how to make this system. And then that's one of the reasons why people have want to make slight adjustments to wealth tax proposals, is that it's like it's very difficult to sort of quantify the wealth of many of these people. Anyways, that's what I wanted to say about that. But yeah, we can move on onto what you were going to say next. So just
No, and I think that you had a really good point, which was that defining wealth also takes different, it's defined in different ways, right? So there are people who gain their wealth through output, people like J.K. Rowling, who, you know, actually did work, made a book. The book became an international phenomenon, and she made her wealth that way. Or people, and then there are people who create their wealth on the backs of other people not getting wealth, and other people purposely being pushed into levels of poverty. People, you know, who own things like diamond mines and things like that, who, you know, literally human atrocities to get those diamonds. And that's how their wealth is made, and things like that. That was basically how colonialism worked. And
Yeah.
so I think people also hoard their wealth in different ways, which was an interesting thing that you said, in terms of things like share buybacks and things like that, which is something I also want to get into, which is how we kind of tie value to important stuff in our economy, right? And because we have a problem basically where everyone is kind of obsessed with maximizing efficiency and maximizing share buybacks. Remember, I said when we were talking about Adam Smith that people want to decrease rent and jack up profits and decrease labor wages and things like that. And so they do this by kind of over financializing the industry and not allowing for a large amount of turnover in terms of technologies
Right.
and growth and things like that. And we see this with things like things like the iPhone, where all of these big changes that Apple created, right? It wasn't just Apple that made them, right? Which is the important bit. It was all of these other small, technologies that were created by people in the government, by society, that then becomes financialized in the economy, right? And so
Right.
it completely distorts our value of who is a producer and who is a consumer in the economy, especially when people typically do both and still have to pay for it, if that makes sense.
Right. We're a little bit short on time, but before we move on, I just want to say, yeah, I mean, um, the thing that you just described is sort of the impetus behind a lot of these redistribution programs, which is that we all can agree that it's some of the greatest technological innovations so far, like the iPhone, like you said, are things that we all benefit from and we all helped create. I mean, not, many of us helped create, many people that are beyond who we think of when we think of the people who made something like the iPhone. Um, and that's something we can all agree upon, and we can use that to say, look, I mean, again, it goes back to how, what do we value at the end of the day, and what can we allow our economy to value, that goes beyond just output, that goes beyond just, sort of what is very thinly recognized right now. But if we can understand that a lot of these technological innovations are a good thing, and B, something that we can all benefit from, especially given the amount of wealth that is sort of concentrated in these industries and in these areas, then we can we can sort of redefine what value means, and what the government its role in giving value to its citizens is. This is really what's at the heart of a UBI, and this contrast between a higher minimum wage and a UBI, which is really funny because I think everything in politics is made to be a versus, when there's nearly nothing against. I guess there's the realism of it is something else, but there's nothing really against the UBI being concurrent with a form of a higher minimum wage. But what makes me a fan of the UBI is that it is unconditional, and it also, going back to a value of the society through the economy. There are a large proportion of Americans who do not do a job or a career that is beneficial to the GDP and to the current measurements of.
Quantifiable, basically. Yeah.
Exactly. They're not quantifiable, but they still add value to society. Yeah. Right. And that's the main goal, right? Is that it's like, if we're going to keep on peddling these jobs that obviously there are a lot of, but that are not all, and that there are an increasing amount of people who don't do, which are the jobs that are factoring into GDP and factoring into things that are quantifiable, that those those jobs include artists, those jobs include caretakers, those jobs include people who, even just people who work and who are paid for by people out of pocket, right? And who don't have to go through any official employment system. But there are a lot, and midwives, I mean, and religious leaders. And so there are a large number of people who would benefit from uh, from something that is comparable to a minimum wage increase, but obviously that a minimum wage increase would not include. And so that's just something that makes a UBI different from some other, redistribution programs. But we can do a whole episode on UBI. But I just wanted to sort of point out that is one of the major, I guess, theory, or not theories, one of the major proposals that have been sort of thrown around about how to make it so that the technological innovations that we love, like the iPhone, can be, I guess, the value of those things can be shared by people, right? And that's concurrent exactly with what we were talking about. And this is a proposal that I'm really happy to say has gained more traction as of late, not only just by people, but also in Capitol Hill. And just like a higher minimum wage, it's been getting more, I guess, screen time. It's been getting more attention. And so there's, like we said in the beginning of this episode, it's very difficult to give an end all be all approach to economics, right? Economics it's just like a normal science where it's constantly changing, it's fluctuating. Things may not help everybody, but at the end of the day, I mean, an economy should serve to maximize the value of every individual, especially though, I mean, I guess especially to those who are actually working to have some of that value, right? Because at the end of the day, I mean, people work because they want to feel some type of meaning. They want to feel some type of value for their existence.
I think that's a really good point that you just said right there, which is that people work to feel some sort of value to their existence. And they did a study actually, which just one last thing I'd like to add, which is they did a study where a lot of psychologists basically asked people, what is your biggest regret in life? What they found was that if people were money motivated, they would have said, oh, I should have taken an investment on that house, or oh, I should have, paid back or gotten back on that loan, or invested in this stock or something. But instead they said things like, I was afraid of letting this person down, or I was afraid of not living up to my big potential. And that, I think, goes to show is that the basic models that we use to model people in economics are fundamentally flawed, and they don't capture the full human experience. They say that people basically reduce people to merely, beings who just want to maximize pleasure, minimize pain, and get a lot of money, and, take the easy way out. And that's not always, the way people work. Financial security is important, but it's not the be all and all. That there's so much more to human life and to human experience that the current economy doesn't capture and yet still promises. And so that's why things like, that's why both Suhaib and I believe in kind of some sort of federal income program. Things like, for me, it was federal jobs guarantee. For Suhaib, it's kind of UBI. I believe in healthcare and things like that, which I don't think are like they don't completely cancel out UBI. It's just
right. They're not mutually exclusive. Exactly. Yeah.
Right. You can have both, and that's why we believe in having a strong social structure. And that's why we, if you know us personally, we supported candidates who had strong social structures.
Yeah. And I mean, more than just the fact that people want jobs to find meaning, because that's not exactly the case for everybody, but people want meaningful work to find meaning, and it's not simply the case that, throwing somebody in a job that they wouldn't like would give them that meaning, but it's that there are so many people who would do work, or who would find value in themselves if they do work that is not included, like we talked about. Right. And so, some type of it would have to be federal, but some type of tool to allow people um, to to take a hold of that passion or take hold of what that is and do something with it is something that's missing right now. And that's really at the heart of it too, is that there is a lack of trust, I think, in the majority of Americans to actually go ahead with many of the ambitions that they have, because um, because I guess, that we always assume the worst, for the most people. And we always assume that most people are not capable of really allowing them to be responsible for themselves, to be responsible for greater output in their lives, right? In terms of their fulfillment, unless it's given to them by somebody else. And that's really not what either of us are really saying. I mean, like we need people to find that meaning themselves, and that's going to happen. That should happen. But to assume that um, that can be achieved without any type uh, of assistance, is ignoring a lot of the realities on the ground, the realities that we talked about in this episode, and that we'll continue to talk about in our later episodes. So that being said, unless Otis, do you want to say anything else?
No, you captured it beautifully.
Okay, great. Well, thank you guys so much for watching. Looks like we are out of time, but that was our episode on the economy, on the stock market crash, on all of these brilliant people who have shaped our economy and the conversations we have about the economy. So please comment below, about what you thought, like the video, subscribe to the channel so that you get an update every couple of weeks when we're going to be uploading a new video. And you can check out our blog as well, as we will have a blog post about this topic that touches on hopefully things that we were not able to discuss in the episode. And with that being said, thank you for watching, and we'll see you next time.
Bye.